All right, let's get into this now. So tariffs, you've likely heard the term, but what do they actually mean? Simply put, tariffs are taxes placed on goods coming into a country. But how do they impact prices and trade? Well, to break it down for us, we're now joined by Xhanti Payi, Economist and Senior Manager at PWC Strategy, who will explain what tariffs are, how they work and why they matter. Well, good afternoon to you, Xhanti. Thank you so much for your time. It can all get a bit confusing, doesn't it? I mean, as things stand now with the trade war between Beijing and Washington deepening, the Trump administration imposing 125% tariffs on Chinese goods and China retaliating with 84% levies, which itself was a retaliation against that 104% tariff, which gets so confusing. So let's start with you then, unpacking what in essence tariffs are and importantly, the implications, particularly to markets like South Africa.
Sure. Tariffs, as you said, are a tax. And really, what the point of tariffs has been to sort of, at the beginning, to protect local industries. So if you think about it, when I import something from, say, China, I buy it from whoever is going to supply it to me, who is maybe sitting in Beijing, and I say to them, listen, I'd like to buy 1,000 of this at this price. Then they go and put it on a train or they put it on a ship, and it starts traveling to South Africa. Now, when and I would have paid for it there. But when it arrives at our border, South Africa can decide, obviously, that they will say, look, actually what we've bought from the Chinese is something that we would like to produce here and produce it quite well, or what we've bought from the Chinese is something that they produce too cheaply and unfairly, and therefore we want to put a tax on that so that actually it is in balance, or it equates to what is actually being sold at home, so that we can protect home industry, or that we actually create a sort of a balance or fairness in that sense. So tariffs really have always worked in a manner that they are supposed to help us balance out the scales. And that's why you actually add them. So we know, for example, in South Africa, we have tariffs for wheat. And those tariffs for wheat are put in to help to grow the local industry. So we know that we can bring in from outside, but as we bring in from outside, we might be hurting local industry. So in order to compensate for that, we put in tariffs so that they're a marginal tariff to help invest in the local industry. And so that's one way that they use tariffs. But really, it's something that is paid right at the border of South Africa by someone who's bringing in their goods. They are not paid for by the person who we are actually buying from, or the country we are buying from.
Yeah. All right. So the 90-day pause, it might be a reprieve for many countries like South Africa and others on the continent, particularly Lesotho, which had that 50% imposed tariff. But what happens after the 90 days? I mean, locally, what we're seeing now is that many businesses are starting to restructure, starting to think about restructuring to avoid losing money. Some citrus companies, and this is of concern, have stopped exporting altogether, we understand. I mean, South Africa is the world's largest, or second largest citrus exporter after Spain. So how should then South Africa be positioning itself to lessen the blow? Because the 90-day is going to come.
Sure. I think one of the key things here to understand is that usually where tariffs happen is that if you start to restructure, you restructure because you have an expectation of something. Now, what is difficult with Trump, what is difficult with these tariffs is that it's hard to know whether or not this is a proper change, is it permanent, or are we actually dealing with something that's relatively difficult to understand over a period of time. So that's really our problem here, is that we cannot tell whether after 90 days, we don't even know that actually won't change his mind in the next day or so. And so the difficulty then with many companies, and that's why some have stopped, is because they say, look, I'm going to send something, and then at the border, when the person who collects it comes, it's now cost 100%, they may not take it. And that's what they're worried about, perhaps. And so they may be looking for new markets, maybe those things will be delayed. So the disruption is quite big, and it's difficult to know what is going to happen. And that's why many people in the market are actually quite stuck. And Trump thinks that he can change the way these things happen, but he can't if people are struggling with expectations.
And then, Xhanti, just speak to us in terms of what we've been seeing over the past couple of hours, in fact, with just a change in terms of the markets. We saw how the Rand reacted to those, high tariffs that kicked off yesterday, and then again, of course, after the pause. Help us then place what is the sentiment there in the market and how it is affected.
It's very much the uncertainty. It really speaks to uncertainty. We're dealing here with really uncharted waters, and every piece of news means something. And I think that this is why this is such a problem, because every time you hear something, and we also know, of course, we are in emerging markets, so sometimes we get clustered together. So when something is happening to China and when BRICS, people sort of worry about us, and then when something is not happening, then a little bit of concern lifts. Then, of course, we're also waiting for some news that are coming from the US around their inflation. And we think about that will have an impact in terms of how we think about the rand and the interest rates that are coming. So the one thing that's happening on trade is just one pocket of the instability that we're facing. There's lots of things that are happening. We're hearing from the Europeans. They're also saying that, things are starting to look, as we were listening to them now, they're also sort of making certain comments, and that is going to move us because we also have a big market there. So everything, but as I say, it's very difficult from hour to hour to know what to expect. And so people are acting on pieces of information as they emerge, which is not usual, because usually you can let a piece of information go because they think, well, this doesn't apply to me, but everybody doesn't know what applies to them and what doesn't really apply to them.
And I mean, I want us to just very quickly, as we wrap our conversation, talk about that very anxiety-inducing term, and that is recession, particularly as we see what Beijing and Washington are willing to do and not do. I mean, China says it is willing to talk to the US, but it won't back down on its tariffs. So what are we likely to see there in as far as recessions are concerned, or how should we be reading these two giants, essentially, are fighting in terms of this trade war?
Yeah, that's the difficulty. One of the key things that China has said, and it's quite clear for them, is that they will not be played with. So they are willing to talk, but I think their first space to talking is that the US will have to first back down, and then they'll talk. One of the things we've seen, and I think that speaks to a recession, is that China has made three things at the moment. They've told their citizens not to travel to the US. They've issued a risk alert. That's surely to hurt the tourism sector. We also know that the tourism sector, if the Chinese have become a big tourist market, and we like that, we've tried in South Africa to get that market. Of course, there's the goods and the inflation that's worrying. And when you're worried about inflation, you're worried about interest rates, which can go up, and those interest rates can harm markets. And then we're worried about jobs, and of course that as markets, as markets, for example, if you think about the citrus industry in South Africa, at such a critical time as we move towards June and the winter time, which is when they actually are expected to produce, that's actually a big worry. And we can tell why they're saying, look, should we actually be making sure that we're planting for this season? It's a bit late to say that now, but or should we freeze? What should we be doing? And that's a really key consideration in terms of what action then they do in market. That disruption can also harm growth because it harms the logistics businesses, the retail businesses, and all of that. So all of the connectivity. So that's why we are so concerned that we are facing a recession here because of the many impacts to be expected.
And of course, the uncertainty too, Xhanti, as you've mentioned. Of course, next conversation should be looking at those various sectors and how they will be impacted. But thank you so much for your time, Xhanti Payi, Economist and Senior Manager at PWC Strategy there. All right.